Hi everyone. Today the Fed seems a little bit closer to pulling off that soft landing in 2024 after the better than expected jobs report. Then we'll take a quick look at markets as they attempt to regain their momentum. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the jobs data did outperform pretty strongly here today, and it seems like we're gliding towards that soft landing path, and markets definitely like the information today. Lots of jobs were created, much higher than expectations. 254,000 versus the consensus of 150,000, so it turns out that JP Morgan was correct. We talked about this being possible yesterday. I didn't think the markets would react as strongly as they did, but sure enough, we got a big pop on those numbers, and that means we could expect a stronger economy here for 2025 if the data continues to hold well. And this does mean that we're probably not getting half a percentage point or 50 basis points in the next cut. 25 basis points is likely to happen. Not everything is perfect though. We are getting stronger than expected economic data, which means maybe the Fed is going to taper down a little bit more. I still think we're going to get 25 basis points. I don't think they're going to stop just because of this, but it is a possibility. The jobs market was what they were citing here, highlighting that dual mandate. And now the dual mandate is coming back into fruition with that first cut already. But the other concern here is, where are these jobs coming from? Food and drink establishments, healthcare, those are the normal culprits, but the government is running a massive fiscal deficit, nearly $2 trillion for this year. Can they continue to employ all of these people? Definitely not, but what are they going to do about it? Are they ever going to cut? Or does the government just get bigger forever? That seems to be the case, at least for now. And then the other question is, did the Fed panic with that 50 basis points when the jobs market really dipped just slightly? Could they have gone 25 basis points, which is what I thought they were going to do? I think they could have. I think they could have been a little bit more patient. They were behind the rest of the central banks when it comes to cuts, but what's the risk here? Is it more risky to being too slow or being too fast? And I think the risk was to the too slow side in this case. Moving over to the Fear and Greed Index, stepped up to a 74 from a 67, so almost back into extreme greed already, 1 point off of it. Momentum, regular greed, strength and breadth really have not dipped very much at all, still in extreme greed. Put call ratio continuing to rise here, back into regular greed. Volatility dipping down but staying elevated. And then looking at safe haven demand, continues to rally, super aggressive here, up into that almost 7 number, and then fear and greed stepping back into regular fear as this pulls back. Moving over to the economic data, you can see all those numbers here. Month over month earnings, 0.4 versus 0.3, previous number revised up, so that continues to trend higher. Same here with year over year number. Non-farm stepping up to 254 like we talked about. Unemployment rate stepped down to 4.1, again another bullish indicator for markets, and they definitely liked it. The U6 unemployment rate, 7.7 versus 7.9, so that stepped down a bit. Are these real numbers? Hard to say considering how much the Labor Department was lying before, but for now, markets do like this. Moving over to max pain, we finished quite a bit above max pain. 567, price was nearly 573, just short of that, so finished well above it, and in fact, I think it actually pulled back a little bit on the day, and you can see all the numbers here for max pain are all well below price. Currently 1% lower, Monday, Tuesday next week about 0.5%, all the way up until Friday at 1.2% lower, so we'll see if markets follow that trend at all, if this matters to markets. Didn't seem to matter here on the Friday, but the bigger numbers here are more concerning out in December, 7.5% lower. Moving over to the charts, looking at the S&Ps here, you can see we ended up almost 1%, big spike early on that data, and we actually stepped back towards bullish momentum. Interesting to see that. Your next level of resistance is the all-time high at 574.71. We're back above the 8 EMA momentum, RSI right at that SMA. If it's going to reject, it's going to do it here. If it pushes back above, maybe we get back to overbought conditions. Current RSI reads a 61.55, which would give you a little bit more room there. Definitely should have put this structure on before. I'd seen it before, but I was hesitant on putting it on, and now you can see we've established this bottom right at this trend line here. And now we're looking at a push right back to this trend line up here. So your next resistance above that level would be 576.30, or about another $4 higher. And then looking at the short time frames here, you can see it was actually a pretty choppy day. First candle was very powerful, a little bit more than 0.5%, hit overbought conditions, pulled back, hit the SMA, ended up rallying into the end of the session, strong candle there, held most of the gains for the day. Again, next level 570, 574.71. Big strong push after hitting that 21 EMA on the hourly and holding all of these EMAs and SMAs into the close. Moving over to the Tasty charts here for just for a moment. That ATR resistance here is at 575.95, so right in here at that resistance zone. You can see the bands are starting to trend a little bit higher, but the upper bands are also trending a little bit lower, so we're getting a little bit of a squeeze there. Dipped low, looking to retest these previous highs. ATR trailing stop 575.95. Moving over to the NASDAQ, we're still in this structure. We tested that 481.94 2 of the last 3 days, and then today we got the massive gap up and rally. We started to rally after hours yesterday. I thought that might have a little follow through. Sure enough, it did. Continued higher pre-market, and then we got the big jump here with the unemployment data. Finished up 1.19%. Got above my level here, 486.84. Next level 492. We are still in this structure, so this is a bullish structure. We didn't hit the upper band here, which is a little bit concerning. Usually that means you're going to get a bigger fall, at least down to this lowest trend, and that didn't happen either. So now we're in this kind of weird kind of middle ground. We're not pushing up to this trend yet. We didn't get here, but we didn't test the low, so who knows where we're going to go. Based on today's candle, you would expect to push to 492. If that breaks, then you have the 500 level, the big psychological level. That's the one we tested here at the all-time high. And then if that breaks, your next trend resistance is all the way up around that 507, 508. And then looking at those short time frames, very similar to the SPY, huge spike, hit the level, big breakdown candle. So it was up 0.89, down 0.8, huge whipsaw. Held the 200 here, found a little choppiness, and then rallied into the close. Ended up closing above the level, and it's holding that so far. So 486.84 is your current support. It's holding it after hours. Who knows if that'll hold into the Monday. If it does, still looking for that 492 level. Moving over to the Russell and the Dow, what a fake out. So big gap down, took out the trend here on the Russell, and now we got a step to bullish momentum. Big up candle, 1.4%. 221.49 is the next level. It's holding in here, tested this level, took it out, and then ended up bouncing just like everything else. So big up move, big down move, held the level. Similarly here on the Dow, gapped up, filled the gap, got back above the trend. Your next resistance is that 426.20 level. Momentum on both of these stepping back to bullish, so you have to play the markets you have. Right now, it seems like we might get a little bit more bullishness Monday. Moving over to Palantir and China stocks here. Palantir jumping again, 1.96%. Momentum bullish, RSI bullish. Seems to have a lot of momentum here, breaking out above this trend line, so who knows where it's going to go. Got to zoom way out. Your all-time highs go back here at $42. Seems like we're headed there. It's only about $1 higher, $2 higher from current price. Think it's going to go, and then China, big jump here, 10.89%. Most of that was in the overnight session. Momentum bullish, RSI bullish. Everything's still very, very powerful out of China. Moving over to Apple and Microsoft, Apple 0.5, same range, nothing really changing there. And then even with all of the bullishness, we got Microsoft still negative on the day, 0.12, closing below the 200, next level 413.36. I think this really got held up by bullish markets. If it was not a bullish market, I think this would sell off. I still think this is going to break down. It looks awful. Markets just not rewarding Microsoft right now. And I think this is the next big bearish play. Moving over to staples and discretionaries, these both caught a little bit of a bounce, 0.33 and 1.3, so discretionaries liked it more of a risk on type play. Staples hit the 55 yesterday, caught a bounce from there, nothing crazy. Momentum and RSI are both bearish. Same here on discretionaries, but it just looks better. Got back above this level here, 197.14. See if it can hold that level. If it can, your next trend resistance would be 202. See if it can get there. Maybe we get a little bit of a gap fill first. Maybe this is a double top setup with the midpoint here, waiting for that double top and then see what happens. But in the short term, it seems like we're going to hold up. Moving over to RIOT and Marathon, these did basically exactly what we thought they were going to do. RIOT's pushing towards that trend line, almost 6%. Think it's got a little bit more in it. Momentum RSI bullish. Same here with Marathon, almost 5.5%. 55 EMA is your next target there at 517.06. Moving over to Breadth, we got a big head fake on Breadth. Stayed basically flat here, and you can see we stayed basically flat initially, gap up through the wicks. Same level here, 51.75 as yesterday. Then we ended up holding up a little bit higher. Momentum and RSI are still bearish, so maybe this is a breakdown, retest, breakdown. Possible setup there. Same here on 50, in fact, and actually it ended up wicking a little bit lower, almost down to the level, 68.66. Took out the trend, almost touched the level. The low was 68.72. Hit the 55 EMA, 68.87. So a little bit of weakness, still well below the trends here. Got back to the 21 EMA at 73.75. Mixed signals, but I still think this is the start of a bigger breakdown. On breadth, we'll see if markets start to go with it. Breadth can break down without markets, but it's not super common. Moving over to yields, look at that big old yield spike, 5.9 and 3.14%. We did stay normalized just barely, 3.926 and 3.969. Hit that level here at 3.974. See if we can get above it and continue to push, but we hit those initial targets on both of these after the breakout here, went to there. And it's pretty interesting to see this rallying aggressively with markets holding up as well. So yields, big spike, almost overbought conditions already with how aggressive this has been, but continues to look bullish, and I think it's got a little bit more in it. Moving over to the dollar, massive push on the dollar as well, about 0.5%. This has been a huge run over the last couple days, really since September 30th. Big run all the way to current price. All week it's been rallying aggressively. Took out that next level, took out the 55. Next level here for me, 102.98. So dollar traders, huge run, 5 days of straight up price action. Moving over to bonds, J&K falling a little bit, but not really that much. 0.09, 9 cents, held up pretty well. And then you can see after hours, recouped all of those losses. So J&K holding up pretty well in there. And then looking at TLT, much bigger down move, 1.23%, momentum bearish, RSI bearish, big volume there. This looks like kind of a mixed up head and shoulders with a left shoulder head, right shoulder kind of bigger breakdown. At this point, 200 is your next support, right at these previous highs here, down around 94.32, and then you got the 144 below that, 93.87. So that should be your next zone. It's been a pretty decent fall, honestly. Already down about 6%, and it's probably going to go a little bit further, 7, maybe 7.5% in there, and then below that you got 92.82. So it'll be interesting to see when this catches a bounce. It definitely will. The Fed is going to cut again, probably 2 times this year, so this will catch a bounce. The question is when. Moving over to my accounts, I did pretty well on the day. I did get whipsawed early, but I was able to reestablish in a way that was okay and made some money towards the end of the session. So sold a 218 for the Monday session for $1.62. That's in $100 profit there. So good there on the day. And then I actually sold an XOP put and then took that off. So I made a little bit of money on that. Watching XOP closely there at the 140 level. And then looking at the Qs here, rolled out to 2 days from now to 483. So rolled up 2 strikes and 2 days for $6 credit. That puts my max profit at $4.89, or about $2 higher from current price, but still gives me plenty of protection down to $4.83. Being patient there, I think we could go higher and I can get a little bit more aggressive if I need to. But for right now, being a little bit more patient with the whipsaw that we saw in the mid-session. Overall, bullish going into the Monday, and I actually had a pretty good week, to be honest. Let me know down in the comment section what you thought of the jobs data. Was the reaction warranted, or are markets a little too jubilant? Let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.